Good morning. What's up, guys? How we doing? Hope you're having a good one here thus far. Market is open, so let's jump right in and get started immediately here. Now, as far as market inertia, remember last week, we finally saw a break of that little flat top bottom of your screen from 21,450 to 21,550. We're now trading around 21,800. Okay, but there's kind of a new flat top just below 22,000. So I've got 22,000 on the radar as a potential level to watch. Not that I'm necessarily bullish. I have zero bias at all directionally coming into most days. Today is one of those days. I have zero directional bias whatsoever. I do not care which way it goes. You'll just trade the price action as it hits. But paying attention to 21.8 as we make tests of that here today, because it has caused us some trouble here in the last 3 or 4 days. All right, now, aside from that, news today, honestly, really slow news day. We have Trump speaking at 1 o'clock. I'm in here to take a look. Very slow, up top. That's it. We have Trump speaking at 1 o'clock. That's pretty much it as far as scheduled news, okay? Now, headlines, obviously, coming out of the U.S.-China trade meeting, we'll see. Keep an eye out for that. So, how do we deal with that? Well, I don't think you should just not trade all day. We deal with that by running live stop orders, okay? And I do think you should have live take profit limit orders set out on all your trades. But if you're like, you know what, I want to leave this on for more of a swing, give it more room, just put it way up high. There's no harm in having it out there. You can always move it down, but if you have it out really high and we get a huge, like 200-point move, you might get a fill. Okay, you might as well have it out. Whereas, you know, if you get up to get coffee or go to the bathroom or whatever, and you don't have that order out, if we see a huge random headline hit that goes in your direction, you're not here to hit the hotkey. All right, so that's kind of what I'm running here today. As far as that, we're just watching price action. Besides that, I should say. So what's up, guys? How we doing? Hope we rested up, had a good weekend. We're ready to work. James, good morning. Chris, how we doing? Diesel Man, good to see you. Tony. Hindmost, what's up, guys? Lee, welcome back, brother. Scooby-Doo. All right, now as far as volatility is concerned here, range so far on the day, well under 100 points. We're looking at about 65 points since the open, which is tight. That's pretty tight. But we'll see here if take a look here. We'll see if this ATR, that's that blue number is the ATR, and of course the orange yellow, that is the range of each individual bar in terms of points. Okay. On a 5-minute chart, which this is, seeing 35 to 40 point ranges off the open is small. It's not massive, but it's okay. It's manageable. We did pretty well last week, all things considered, trading relatively low volatility. We'll see. The trend here lately, the last like 1 to 2 weeks, I don't know. It's been kind of the reverse of what we saw the 6 weeks before that. I've been trading okay in the morning and then pretty damn well in the afternoon. Previously, I was trading pretty damn well in the morning and then like all right in the afternoon. Lately, this last week, the trend seems to be the opposite of that. So, I don't know. I'm keeping that in mind. I do think it's a little bit of a fallacy. The sample size is too small to make any kind of adjustments, but just going to show up, trade the price action the best we can. Chris, good morning. Scott, what's up, brother? How we doing? Says, what are your thoughts on trading NQ during a prop eval and after passing moving to MNQ? That's exactly what I do. That's what I do. I can only tell you what I do. I trade the evals very aggressively for one reason: opportunity cost. Once you're taking payouts and stuff, I don't think it makes sense to spend a week, even 3 days in an eval if you can help it. Now with Take Profit Trader, you have to trade at least 5 days. All right, so the way that I approach those is I just try to get day one. My profit target on it is 50% of the total profit target on the test. This is for Take Profit Trader. If I hit it day one, then day two I try to get the next 50%, If I hit it day 2, then I'm pretty much there and I just flip the last 3 days. If I don't hit it day 1 or I have a red day mixed in there, whatever, then obviously that gets extended. You have to spend a little bit more time on it. But with Apex, where you can pass in a single day and the evals are cheap, I still take good trades, okay? I don't just gamble them. But I take the most risk on trade number 1, so that if it happens to be a loser, I can move on and not invest too much time in that eval. But if I win the first trade, then I slowly size down into the finish line. Again, I'm taking good setups. I'm not just taking anything. But that's how I do it. I can only tell you my truth. All right, so we've got about 4 minutes left on this 5-minute bar. And we're kind of coming into the top of that 15-minute opening range. I know a lot of you guys like to look at that. And that would be right there. 8:15. Scott, thanks, man. Used code BIG on my first Take Profit Trader account over the weekend. Cool, brother. Yeah, I'm a big fan of Take Profit. It's different. You know, it's different than Apex, which is why I think they are so synergistic with each other. The Take Profit lets you, get some revenue generation going. If that's something you need right now, obviously that's a huge benefit. Daily payouts. This is an eat what you kill business. And Take Profit Trader lets you eat what you kill immediately. Whereas, with Apex, it's great for scaling, but you have to wait those 8 trading days. So they go hand in hand in my head. You get the revenue generation with Take Profit, and you can still scale relatively decently, but Apex really lets you go big, even though you have to wait. All right, let me just get my accounts scaled properly here. Figure out how I'm going to scale these today. All right. Patel, good morning. How we doing? So, I mean, you guys can see here, we have that clear little flat top that formed pre-market. And then we just tested and broke through barely. Took out some stops above the high of day that we got right off the open. So that, again, we talked about this last week. This here, I mean, technically that's a break of the 15-minute opening range, right? But you have to remember, we're in this market. Okay, we're not in a big old trend market. So, maybe traders who took that get lucky, it pulls back and it pushes higher, or at least enough for them to get out with some kind of number of points. But we know, I mean, right, in a range market, the bears are just going to sell high. They don't even necessarily need a reason to, at least a lot of bears. I like to have a reason to. But in range markets, they can justify, okay, I'm going to sell above this. Hey, maybe I'll sell above this. And you get a lot of this. You get a lot of push, wick back for, 2-3 minutes plus. In trend markets, that doesn't happen as much. So the 15-minute opening range break can be a great, great trade. But you don't want to give back all the profits you made trading that setup when the range market hits, which is what we've been in here for quite a while. Weeks and weeks and weeks. Months, really. All right, let's see if the bulls can actually maintain this little break test. Get the bear orders out of the way. There's a little bit of a curl from pre-market up here at 824. I don't care too much about that level. Between here and 22,000, there's really not a lot. I mean, you could argue between about 21,850 and 21,930-ish. I'm not going to. Really, I'm just looking at to the upside 22,000. That's a tier 1 level. And down from there, I mean, we could argue 21.5 just because it was kind of the midpoint of that long-lived flat top that we saw between 21,450 and 21,550. But more important than all of that, again, is just the price action. As you can see here, the bear is really trying to just sell high and take that thing lower. And that's the range mentality. In a trend market, if we were in an aggressive trend market, that little break there, chances are, probability says, would have likely continued, at least for some kind of move higher. Can't have that same confidence right now. You know, there's a conversation here, by the way, for scalpers, which I would consider a lot of us here are scalpers. However, if you are like an aggressive, just straight up price action scalper, you know, there's an argument here. This mathematically makes sense, okay, but I think it's a lot easier for a computer to trade this way, and most people end up getting hurt when they trade this way. But when you're in a range market like this, like we were talking about, the bears are going to sell pretty much above anything. If you want to be a scalper who trades that way, that can absolutely work. You can even add to losers if you want. However, it'd be irresponsible for me not to mention that the only way that that does work is if you're willing to add to the losers and cut trades when it's time to cut the trade. Now, when is it, you say, well, when is it time to cut the trade? That's the problem. There's really no easy identifier to be like, I'm gonna risk this much. You usually end up having to come up with some kind of ATR factor of ATR, I should say, to where you're gonna cut it. Or some kind of ATR push outside of like where the mean is on the day. Because you're trading the outskirts of the existing channel, so there's no bars to risk. It's like, well, you can't risk, you know, maybe you could risk the size of the average bar. Again, that's an ATR mindset. But a lot of people, what they end up doing is, again, it can work to just sell the outskirts, buy the outskirts. Oh, if it goes against you, you add, then you get out at a profit. Mathematically, it does make sense because we're in a range market and other traders are going to be doing those same things, which drives price action back and forth a lot. However, when you break higher, if you do end up catching the breakout, which if you trade that way, eventually you are going to catch a breakout. If you just keep adding and your starting position was too big to begin with, which I need to mention, if you're going to trade this way, your tier 1, your first tier has to be very, very small, so you can add. A lot of people, what they end up doing is they end up trading, yeah, this is small, and they're trading like 5 micros. It's like, this is already a disaster. And now they're adding another 5 as it goes higher, and oh, whoops, they caught the trend, and now they're like, well, I can't cut it now. That's too much of my drawdown, or that's too much risk in my personal account. And that is just a tremendous problem for almost everybody who tries to trade that way. However, you guys know, I mean, I'm gonna tell you what I know people do, and it works. Mathematically, it makes sense. Algorithms do trade that way, but they have to have that outlier loss sometimes that they're actually willing to cut. And I think it's hard for humans to trade that way. I think it's just easier to wait for confirmation so that it solves a few different problems. Not only do you have a little bit more confirmation, the probability slightly increases. the reward to risk does go down if you wait for confirmation in a range market like this, because now you're pulled back further deeper into the range. Your risk is a little bit higher, theoretically. Your reward is a little bit lower. But now you have some kind of definitive area to manage risk, right? Which is, I think, very helpful. Otherwise, it feels arbitrary, and it's an easy excuse to keep moving it higher as it goes against you in a short here, for example. But yeah, I think it's just important that you guys, if you don't already, understand that mathematically you can make a lot of money trading that way if you cut off the hard big losers. You have to cut off those tail end losers. And that's really hard, because when you catch the breakout and you start adding, it's like, holy shit, I just wiped out 5 winners with this one loser. It's like, yeah, that's part of that game. You're gonna have big losers and a really high win rate and a whole lot of small winners, and then every once in a while you're gonna have a really big loser that you can't hold on to. You gotta cut it. So psychologically, it's, I think, one of the most difficult ways to trade, but it does make mathematical sense. But right now, I'm just sitting here staring at this going back and forth here around this little top. Waiting for a little bit of a confirmation entry here. Javaz, good morning. How we doing? Mario, good morning. Sinful says, Tesla going to 400 plus by the end of the month. I don't know, what do you guys think? Is Tesla going to 400 plus by the end of the month? Or does Sinful have some out of the money calls that he's trying to pump? I don't know. What's up, Gaines? How you doing? Welcome back. Pumple, what's up, brother? Good to see you. I don't really want to get into it, honestly, because I think it's not beneficial and it would just be an emotional conversation to have around here that's really unnecessary and not relevant, really hardly at all. However, I don't, like, the whole Elon Musk situation, I don't really get what's going on. It just seems like he left the White House to focus on his companies, right? Which I get, it makes sense. Like, oh my God, like I've been gone for however many months at that point, 6 months plus, and things aren't going great. Maybe I should go back and run the companies, which, you know, it makes sense as a business decision, but then I don't know what's going on. I haven't really kept up with it. Seems like kind of a step backwards with everything going on now. I don't know, man. James, what's up? How we doing? Yeah, you guys see these little bars that kind of just mirror each other? For me, I gotta let these clear. Give me something a little bit more definitive. Pumple! Back with the reminder, baby. Yes. Apex is back to 80% off. By the way, on the initial buy and on the rebills, if you don't pass the eval in a month, which, you know, you can pass in 1 day. So Apex is 80% off, single day pass. Make sure you use code BIG to get both of those things, BIG. That just started here this morning. Cardo, good morning. How we doing? Joe says, how do I turn off my brain? My brain says, quote, everyone and their mother sees 815 break and fly. Everyone loading up on longs, crap ton of stop losses below liquidity. I see what you're saying. Well, tons of stop losses below. Those would be sell market orders. Algo fakes the breakout, people load up. Well, yeah, you know, Joe, I get what you're saying, and what you're saying, I don't mean this to sound the way it does, but I'm just going to be straight up. What you're saying in the earlier years, it seems very logical, and it seems to make sense, and it's like, a lot of people fall into that, but again, come back to always what we're talking about. Market inertia. What has the market been doing? Markets are resistant to change. They don't want to change until they're given a reason to do so. Usually it's some kind of big news event. Or something that lingers in the news for a while, something that drives things, starts a trend, something like that. We really haven't had a lot of that lately. I mean, we've had a lot of news, obviously, with tariffs, but nothing really pushing things up out of the range in either direction, down out of the range. So when you're talking that way, you're like, or you're thinking that way, you're like, well, everyone sees 815. Do we get a breakout in a trend today? Of course it's possible. But probability wise, it's rather improbable. So when you see a push to 825, you have to remember, like, what are the bears going to do? They're looking for any reason to sell. And right now in a range market, a reason to sell for the bears is, oh, it's above this, let me sell. They'll just sell above whatever. Same way, bulls will buy pretty much below whatever. We haven't seen a lot of trends succeed. That's why when you look at the daily chart, bottom of your screen right there, we see kind of a lot of small herb-ish bodies. It's not as bad as it was, here. But we're seeing a lot of smaller bodies and some wicks. Each wick represents a breakout attempt and a fail. Breakout attempt, rejection, fail. Now again, if we see a break of 820, 815, 820, we could certainly trend, but that would be a big difference in the market, a big shift that would have just happened to happen today if we saw that. But if that occurs, I'll hit it. All right, here's the test. Again, there's always a balance, right? As soon as we break that high, you're going to see bears step in. There it is, and try to sell it back down. Now let's see if the bulls can just strong arm them. That's always the question. It's not a question of are they there. They are 100% there. You can see right now they're wicking it back. They're trying to sell it back down. Let's see if the bulls can overpower them, though. Bull's getting a little bit better push. Yeah, you can see those bears trying, but they're not succeeding too well yet. They're really trying. Now, this is interesting because you look at this. This is where we have to start thinking about a 50% retracement zone if we end up getting a pullback. Because right now I see a lot of bears probably averaging in on this short. And that's going to put their average, on this leg. We kind of already got it here for the 50% on the day. So I'd more so be looking at this leg. That put their average probably about here. Moving up if it goes higher. So when you get a pullback again, those bears are like, thank the heavens I can get out at break even, man. Three and a half minutes left, by the way, on this 5-minute bar. I'm watching this one very carefully. Dominic, good morning. Yeah, Patel says, Nico, do you think this will be a trending day today or tomorrow? I will not bet. Listen, in the market that we've seen here, I think for anybody, if anybody sits and says we're going to see a trend day today, if it happens, I think they got lucky. Okay, because if you look at this and just the inertia of the market, again, markets are resistant to change. There's really no reason for the market to break into a trend unless you get the snowball feeding into itself enough where people start buying into that idea. Whereas just this little push here, less than 100 points. The whole range is less than 100 points on the day here so far. I think it'd be very foolish to go betting on a big trend. You could make the argument that, hey, I think the market wants to see 22,000, but you could have made that argument the last 3 trading days, and it didn't. We don't deal in certainties, right? We gotta deal with only probability. That's it. But that doesn't mean I'm not against, riding a push here if it starts looking clean, which it's looking reasonably clean, but you could argue we're in a little bullish wedge. Now, by the way, understand, when I say big trend, and I'm saying, like, I just don't, I think if it did happen and someone called it, I would think they got lucky. When I say big trend, I don't mean a push to 21, 950. That's not what I mean. Trend days are like 500,000 point movers. That's a trend day, not 150 points. You could almost still call that a range day if it reverts back to the mean. All right, we've got 35 seconds left here on this 5-minute bar. And as strong as this candle is here, I gotta tell you, I'm not against buying the rollover. Not a ton of risk, All right, let's see what we get here. All right, and I'll buy that rollover. So I'm going to extend this out. And see if we can get a push up into 21.9s again. Even if we got a push to 22, I would very much so hesitate to call it a trend day. We're talking 500, 1,000 points for a real trend day. This is just a little push that I got to put on. Yeah, Pumple, I'm looking for a bit more of a swing mentality here. Obviously, you can see everything's pretty wide. Risk on this trade is... Let me do some quick math here. Yeah, risk on this trade is about 7,300 bucks, so a little over 7,000 bucks, and I would love to get at least 70 points here. So I'm willing to risk the bigger curl. I'm not willing to risk like the entire day curl, you know, 100 points, because then we're kind of coming into 22,000 once I just cover 1-to-1. So what I'm thinking about here is like, well, I'd prefer to get a little better than 1-to-1 here, maybe even 1.5-to-1. And if I want to get that, if I risk the whole curl, then to get there to 1.5-to-1, we're at 22,000. So I'm thinking ahead here. So I'll risk this little curl. I'm comfortable cutting it there and taking a $7,000 loss if this breakout proves to be nothing. Because if we end up pulling on back, you could argue, well, hey, a little ascending support, that would have broken that anyway. It would break the 20 EMA on the 5-minute. And then once we break through here, that curl, the entire idea is essentially out the window for me anyway, so I'd cut it there. But let's just see what it can do. Again, minimum here, I'd like to get minimum like 70 points, which is maybe 920 for a minimum. 21,920, that is. Again, a bit more of a swing mentality here. Yeah, Patel, I mean, if we could get, yeah, I mean, if we could get 90-ish points. Yeah, like if we could get a little over 90 points, that would push this into, if it ends up being a push, that would push this into a 10K plus winning trade. But again, I don't really care about that. I more so just want to see if we can get a minimum 70 points, manage bar by bar. And when it's time to hit out, it's time to hit out. Whatever we get, we get. Giovanni says, on those strong rollovers, ever wait for a small pullback for entry, or really who cares? Your stop loss is 40, 50 points down anyway. It's a little more than that, actually, to stop. Yeah, so Joe, on the strong rollovers like this, in this kind of a move, I prefer to just hit it, and if I take on some heat, I could have gotten a better entry, who cares? But if we're in a much clearer, softer push, like the push is a lot softer. I wouldn't say this is the strongest push ever, of course it's not. But if the push was arguably quite a bit softer and less aggressive, then I would probably buy, but it was still very much a bull channel or bull trend. I would very much so wait to buy probably the low of a bear bar. But here, the push at entry was strong enough where I'm just like, looking to get in, because a lot of times you'll just miss it if you wait. So again, as usual, the name of the game here is context, as is typical in all this. The softer the push, if I'm trying to get, you know, I hesitate to use the word trend because I wouldn't call this a trend. However, it is a small bull trend intraday. You see the difference there. The softer the quote-unquote trend intraday, the zoomed-in trend, the more willing I am to wait for an opposing close of a bar. Like here, I would wait for maybe a bar like this and buy the roll over that. You'd say, well, normally you get short on those. Yeah, but context, right? We're in again, in my made-up example, we're in a soft bull channel, so I'll wait here, buy that, betting it's not, you know, we're not breaking out of the channel, we're just going to go higher. But here, you know, this bar is beautiful. I just got to put that on. This is where, like, discretionary comes into play a lot, especially trading futures. There's just not, like, a setup. There's never going to be one setup where it's like, trade this one setup twice a day and make a living. You have to have the setups, but then you have to apply them in a discretionary manner contextually in the market you're in, which is kind of the hard part. I've always been a very robotic trader. So when people say like there's very much so an art to trading, it's kind of like, yeah, like kind of hand wavy. But there is. I mean, there very much so is. Huge. You have to try to understand the context, see how your setup fits into the context, and then make a decision on what you're going to do. Put it on, accept the outcome, then move on. So again, risk on this trade here is about 7,300 bucks. And as far as profit potential, anywhere from 7,500, I guess, to more. 10K plus, so we'll see. Here is the account roster. And there's the open P&L so far here. We're about 12 points in the money as it sits right now. Bruce, good morning. How we doing? What's up, other Bruce? How we doing? Now, you know, again, minimum here, I'm kind of looking at 920 and a quarter-ish as my minimum. Leave this nice and high. Leave, again, like we talked about at the beginning of the stream, I'm leaving my limit orders nice and high, just in case something crazy happens. You know, this is definitely more of a swing mentality. I mean, you're looking here. Look at these ranges, guys. These are 5-minute bars. 18-point ranges back to back on 5-minute bars. It's slow. It is certainly slow here. What do you guys think? Yeah, Joe says, hit the like button. Appreciate you. Let's take a poll, but let's do it in the text, in the chat. Yes or no? Actually, you know what? Let's say target or stop. Am I hitting target on this trade or am I hitting stop? I'm curious how you guys are seeing the market right now. Drop it in the chat. Target or stop on this trade here. Target, 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 stop. Gains, you son of a... Target. Yeah, Clark might be right. Flat. Well, why do you guys have some faith in this trade? That's good to hear. Seems to be at least 75% target. Let's see if the Bulls agree, man. They're having trouble here. Ricardo says you'll hit target around 3:55 p.m. Eastern. Lee says option C. I see you managing early. There is a lot of premium levels. Yeah, we'll see. Austin says, depends what happens at 21,880. What are you looking at exactly, Austin? We got a Friday session. Yeah. Yeah, Friday high. We'll see if we struggle around 880. Oh, there's a push. Beautiful. Dominic, right now my stop is just below that one little curl, so it's at 21,782.50. Ah, Javaz, you can't change your mind. You already bet against me, man. Once you're on that list, you're not getting off. Holy shit. Goodness. Oh my goodness. We just got news, I think. Oh man. Yeah, nothing coming through the news feed yet. Yeah, you can see those are those bears. Just trying to sell whatever they can. Any reason to sell here. Again, we are still in a range market. Yeah, I mean, now again, my minimum here is 21,920-ish. But I mean, I'd love to see if we could get a bit more than that. Come on, Bulls, get us up through 21.9. And then maybe we're home free. By the way, 21.9 is a tier 3 level. I'm not really looking at it on its own. Nico, do you prefer to grow with more contracts, micros, or take profit stop loss bigger when you are growing the accounts? I scale the contracts. Scaling the take profit and stop loss, I think you should always just put it where it makes sense. Trying to scale that way with using the same contracts and bigger targets, bigger stop losses, at some point you end up kind of maxing out what the market will reasonably give you, especially if we're in a range. And I think it can harm your trading. Now, if you are a like if you're scalping with 5-point stops and your biggest problem is you're getting chopped up, death by 1,000 paper cuts style, then that would help you. But like here, if I was trying to scale by doubling my ratio, I'm making a really big ask of the market that just isn't really, the probability starts to really shift. Nah, man, we're doing both. Whatever sets up, I'm hitting it. We had a trade like this, I think, we had a trade kind of like this last week. Ended up being like a $10,000 winner. I mean, I would say we're still early in this trade, to be honest with you. I mean, 20 points in the money. That's nothing. I'm looking for at least 70. If we can get it. Giving this trade room, fully expecting to take some time. All right, Jeff is asking a very important question. Jeff says, with these larger trades, 100 points last week, hoping for 70-ish, 70 minimum on this one, concerned about the 30% rule at all, or are your profits high enough per payout period that it's a non-issue? I'm trading, so I scale horizontally. So I trade pretty small per account, okay? So even if we go big in the money on one trade and pull way back and stop me out, it's not like a huge chunk per account. The total P&L is decent, right? It's okay. But per account is not that big of a deal. If I were trading like a full mini, this would be a huge problem. But I'm not. I'm trading like a few micros per account. It varies, obviously, depending on the account, where I sit on the account, if I've taken a payout recently in that account, or it's been a few weeks. Which is, again, just another reason I think to scale horizontally. It gives you more freedom, because each account, the total P&L is the same, but each account is a little less volatile, dollar-wise. Yeah, gains. I mean, to me, the way I look at it, it's the only way to do it, man. At least with prop trading. It's the only way that makes sense in my head when I started running the numbers. You have to, I think if you're not sold on the horizontal scaling theory, just think. I mean, it's kind of the literal opposite, at least the per account opposite of what the prop firms are kind of hoping you do. Right? Because they make a lot of money when a lot of people just blow through accounts constantly. So if you're like, all right, you know what? I'll play your game. I'll max out Apex to 20 accounts eventually. I'll max out Take Profit to 5 accounts eventually. But I'm gonna trade small in each account. That's not really how they would prefer you play. They would prefer that you trade 20 accounts, yeah, but they want you to trade like 10 minis and just blow it. I mean, I shouldn't say they want you to do that. They hope you make money, and eventually they hope you become a huge trader and they take you live and then they get a percentage of your profits. But they need people to fail, obviously. That helps in revenue generation. That's part of the business model. It doesn't make them evil, by the way. It's just the business. So don't be one of those traders. Makes sense to me. Young man, plus 7R today. Awesome. Good work. Gonna go get some sun. Wish the trades go well, everyone. All right, young man. You're out of here early today? 7R. It's a beautiful day. But I mean, I'll tell you, with especially like at Apex, when you scale horizontally, it fixes a lot of the rules that you inevitably will break trading minis in less accounts. How would you suggest to start scaling horizontally at the beginning? I mean, you have a few options if you want to like go quick. Just get one account funded, make sure you're relatively consistent, and then start scaling. I think for a lot of people, it makes sense to trade one funded account until they get a payout, and then once you get a payout and the money hits your account, then you can use that money and start scaling. But I don't necessarily think you have to wait for that. If you have reason to believe that you're a consistent trader with edge, and you're not really bootstrapping it, like you have a little bit of startup capital, you want to make sure you have edge, okay? And that should be done ideally in the evals. But I don't know, go from 1 to 3, 3 to 5, 5 to 10, 10 to 15, 15 to 20, and take your time with it. But if you don't have edge, like if you really don't have any reason to believe that you're gonna be able to get payouts because you're a very inconsistent trader, what you should do, really, is get one eval and spend weeks in there trying to get edge, and then once you have edge, start scaling. Oh yeah, Mike. Mike says, I was about to take my first payout, had to take one more trade. That didn't work early on. I'd def say take a payout when available. Mike, did you have to take that trade or did you just end up taking it? But 100%. I mean, a lot of people, they'll try to, like, especially this is really common on Apex. A lot of people, they're like, I just want to build a huge buffer and then make $250,000 a day. Like, that's what I'm going to do. I mean, sure, if you want to go for, like, the payout record, fine. The way I look at it is, like, who cares? Just when you have payouts available, especially in the beginning, just take it. Take the money. It's your money. Why leave it in their hands? Why not just put it in your account and do whatever you want with it? You can even, I don't know, you can trade with it if you want on your terms. Well, why leave it with them? I don't understand that mentality. If you want to someday build a huge buffer and try to get like the payout record or whatever, that's fine, but just get some money coming in first. If the payout's available, man, take the money. All right, come on, Bulls. So we were at best maybe 42 points in the money so far on this trade. Currently sitting break even on it. Again, lots of room. I expect this thing to take some time. But yeah, I mean, I don't really understand, like, what's the end goal if you're trying to just build a huge buffer in, like, Apex accounts specifically? Like, I've never really understood that. Obviously, you're like, well, duh, I'm trying to make tons of money. But most people who do that, they're already trading way too big. And if you run the statistics on it, which do not lie, there's a certain % probability that, you know, you're going to blow up every X sample size of trades, every 100 trades, every 10 trades, every 500 trades. There's a certain percentage probability that you're going to blow up because you're trading too big. Which, again, almost everybody who builds a huge buffer is trading way too big. And then eventually, they have 100,000, $250,000, $500,000, $1 million bucks that they could take as payouts in these Apex accounts. It's their money. It's not Apex's money. It's your money. You can request it right now. And they blow up. You didn't blow up the Apex accounts. You blew up $1 million of your money. Why? Why not just take that money, and if you still want to trade with it, fine, trade it on your own. It's like, it's this bizarre mentality of like, well, it's house money. No, it's your money. It's not house money. House money doesn't exist. It's yours. Matt says, I still have yet to get a payout on my first PA. I broke the windfall rule when I got a 2K trade and let the day end. Now I have to build it to at least 7,500 buffer before I request a payout. Well, you'll get there. That's really no big deal. I feel like I see people get caught with the windfall rule often for like different things. How do they even define windfall? I feel like they use the word windfall for different reasons. I don't really understand. I've never had any issues. Corey, what's up? Appreciate you. How you doing? Sonny, what's going on with this trade is we've had it on since this bar here. Bought that rollover. Swing mentality. Nice and wide. And by the way, that target is not necessarily my target. I'm looking for a minimum of 920. What's up, Ono? How we doing? Tex says, what's the reason for wider targets today? That's what the market called for, so I got to put it on. Oh, I see. So they're calling the 30% rule windfall. I guess that makes sense, because I've always thought that they're denying people with the reason being windfall, almost like using the term windfall interchangeably with gambling. But I guess that makes sense. If you have a huge profit day and the rest of your days are all over the place, a lot smaller, I guess it's kind of the same thing. But yeah, the 30%, I would just call it the 30% rule. I suppose they have like 2 of those. All right, we've got this 5-minute bar closing here in 15 seconds. We're kind of coming into that 5-minute 20 EMA as well. Just kind of paying attention there. Yeah, we got in this trade on the rollover of this bar here into this bar. So at best so far, we've been about 42 points in the money. And at worst, maybe 14 points in the red. So we'll keep seeing how this thing develops. Yeah, so they're just, they're calling their 30% profit on the day rule windfall. I guess I didn't make that connection. I kind of thought they were calling windfall just straight up gambling. that. It was gambling for me that day. Yeah, I mean, listen, with a firm like Apex, if it helps you not do it, you gotta understand that if you go on full tilt mode and you're gambling, they're gonna know. Like, they're gonna look at the data and be like, okay, he lost 3 in a row, and by the 4th trade, he was trading, you know, the full lot size of contracts allowed. You're not gonna get away with it. So even if you do get away with it on the charts, they're probably gonna deny your payout. So you might as well just not do it. Dominic says 50% retracement is around 820-ish. And that 50% retracement, obviously what we're talking about there is the average in bears who averaged in on this big move up like we were talking about a little while ago. You know, that 50% zone is where they can kind of get out of break even. Which does add some buying pressure as they get out at break even. Yeah, Vinny, it's certainly not a sure thing. None of it's a sure thing at 50%. But it's a reasonable expectation to see a little bit of added buying pressure. Is that enough to bounce it at the 50% retracement? Not necessarily, but it does change the balance a little bit. All right, well, ATR here on the 5-minute chart is currently at about... it's at 24. Oh, goodness. It's at 24 on a 5-minute chart. That's pretty light. And ATR, again, is the average true range. So it's the average range in points, top to bottom, of a 5-minute bar right now. That's pretty light. Well, kind of sticking to break even here right now. Getting some headlines here out of the New York Fed. Not really moving things too much. Essentially, they're saying that the consumer's outlook on the job market improved in May, and in May, the average view of people's personal financial situations improved slightly. That's pretty much it. Obviously, inflation expectations, they came down a little bit. Nothing too crucial here. Dominic says, 950-ish? Yeah, well, we'll see if we can get a nice little push. This bull channel can strengthen back up, push through those highs, get a nice higher move. Well, you know, in this trade right now, I gotta tell you, I don't hate the calm movement. However, just for conversation's sake, this volatility has been so low lately. I mean, 16, 17 points the last couple of 5-minute bars. In 5 minutes, less than 20 points. That's low. That's low. I mean, that's okay, but it's low. Yeah, Jim, the summertime thing is, it's very real. It's very real. I mean, the markets, almost every year, they tend to slow as summer comes in. Which, you know, the whole summertime thing has never really made a lot of sense to me. It makes sense in, like, the small cap world because it's a lot of human traders, and human traders tend to show up less consistently in the summer. It's just the way it is. But in futures like this, if 70-80% of volume is being carried out by algorithms, it's not like the algorithms are out on the boat or hitting the beach. So it's always confused me a little bit why the markets tend to slow down so much. The big markets, futures, often obviously ETFs, blue chips. In the summertime, just because the people are gone doesn't mean the computers are turned off. And who's to say all the people are gone anyway? Maybe a few. Yeah, I mean, that makes sense. Maybe a lot of these institutions. Another reason why I think you should just trade your own money if you have the time and the will to do it. A lot of these institutions, maybe they are keeping their algos on a much tighter leash in the summer when there's people out missing from the floor. You know, it's the tech guys. Some of them are on vacation, whatever. They've already hit their quota for the year so far. They're like, we don't want to ruin this. It looks good. I mean, at the end of the day, their job is to put up numbers for the clients. Their job isn't institutions. Their job is not to put on, at least ones that already have a reputation, their job is not to put on extra risk and risk underperforming one year so that they maybe could overperform extra. They'd rather just hit their numbers and then, I would expect, protect those so they can keep posting consistent numbers year after year for their wealthy clients to say, wow, I'm with the right guys, you know, that kind of thing. Maybe summertime's the time they do that. Makes sense. Matt says, question, have you always been really disciplined or did you really have to cultivate that? No. No, at some point in trading, and by the way, I do think it helps if in life you've been very disciplined in another aspect. Whether you have a military background, I think is a big benefit. Anything, a sport, fitness in general. If you've been competitive somewhere else in your life, I think it helps a lot. But no, in trading, no. I've made every mistake in the book times 10, times 100. I've done the dumbest things you can imagine many times. In trading, eventually you just get so sick of losing that you're forced to be disciplined. Because, like, realistically, what's the purpose of not being disciplined? Why do you break rules when you're trading? Because losing hurts. So you're breaking rules to try to avoid the loss, right? You're moving your stop loss to try to avoid it getting hit because that hurts, right? But eventually you've gotten hurt so many times bad by breaking rules. Because when you first show up, let's put it this way, when you first show up to the party, the market, you're like, all right, it's time to make a bunch of money. And then you get a paper cut. And you're like, oh shit, that didn't feel good. That kind of hurt. So you step back and you're like, when someone comes up with the blade to give you a paper cut, you are like, no, and you push back and you start breaking rules. You start moving your stop loss to avoid that until you eventually get hacked in half with a dull axe. And you're like, well, I'm lucky to even come back from that. So you're like, I'll just take the paper cut. Eventually you just lay down and take the paper cut. And you know what? This happens to everybody. Everyone goes through the same thing. Yeah, Jared, every account is treated individually when it comes payout time. Yeah, the dull axe, damn straight. So, I mean, clearly the market right now is in a trading range. And this trade, at this point, at this very moment, is a bet on a second leg. Which I'm still completely fine taking. Given that the entry was kind of hiding right now. But given that the entry was a very, very clean close that we really haven't seen to the bear side. We have not seen the equivalent to the bear side. And this is really common, especially in range markets. You get this little push. Okay, then let's start from here. You get a nice push. And some sideways, maybe even some slight descending trading action. It takes a breather, right, for a while. And then my bet right now is, let's get a second leg. But you know what? If we pull back and end up stopping me, that's totally fine. The idea changed enough anyway, and at that point, I'd want to be out regardless. So, at this point, just let it work, man. This is the job. This is the job. Now, Roman, this is definitely more of an intraday swing. 100% more of an intraday swing. I do both. It's just that's what the market called for here this morning, so I got to put it on and let it go. You know, when the market does give an intraday swing, for example, to make this clear, if the market gave me a scalp and an intraday swing setup at the same time, I'm taking the intraday swing. The reason scalping is something that I'm, you know, such a backer of is because the market doesn't give you good intraday swings that often. They're relatively rare. You know, maybe 1 or 2 or 3 a day. So between that, if you're not in a trade or if you're sitting and it's 11 a.m. and the market hasn't given you anything, there's a lot more scalps that do have edge that, in my opinion, we should be taking. If you're going to sit and work pretty much the whole day anyway, as far as trading the market open, while the market's open, I should say. But given the choice, I'll take the swing. It's just a quote-unquote easier way to potentially catch the points. Jimmy says, if the ATR was higher on this trade, would you scalp around the core? Well, so Jimmy, yes. However, with my current setup, with all the accounts I'm running, I would be uncomfortable doing that. Well, first of all, because ATR is so low. But if the ATR was higher, I would still be uncomfortable doing that today because copy trading issues. When I already have a position on and I'm in, out, in, out, in, out, it just opens up a lot of potential for a copy trader problem that I'm not really interested in. So you can see here is a test of the 5-minute 20. Not that I care too much, but it's worth mentioning. Okay, so at this point in the trade, let's see. Our best, we've been 42 points in the money. Maybe a little more. And at worst, we've been about 20 points. Yeah, 20. Well, maybe now 23 points, 22 points in the red. Yeah, Derek, I'm using the affordable indicators copier. You can just buy it. Anyone can. All right, well, Bear's taking this baby lower. We have 20 seconds left here on this 5-minute bar. See how it rolls over. By the way, we've got CPI coming up here on Wednesday. Wednesday morning, 7:30 Central. So we'll keep an eye out for that. Tomorrow, that does tend to shift the afternoon. Tomorrow. Not much volatility expected out of that, at least from me today. It's actually kind of an interesting news week here. Again, CPI on Wednesday, the second half of this week. On Thursday, we get U.S. initial jobless claims, PPI. Obviously, there's 4 PPI numbers, the year-over-year and month-over-month, and then the cores for both year-over-year and month-over-month. And then Friday, we get the prelim number for the University of Michigan sentiment, which is the important one. The prelim is more important than the final, because it's kind of the first look. So Wednesday, Thursday, Friday, we've got some news in the mornings. And I'll update you guys what that came in at on the stream those days. Yeah, tubed out. This is definitely likely to be a longer trade. Take its time here, which is fine, by the way. We are nearing, by the way, the break-even point on the day for the Nasdaq, which is certainly an area to watch. Vinny says, Nico, you trading the 5 for volatility reasons? Yeah, a few reasons. I prefer, if I'm going to swing, I prefer the setup to hit the 5. And secondly, the volatility lately is so low that the 2-minute is a lot more wicky. Here, like you look top right of your screen. You know, the volatility on the 2-minute chart, the ATR is going to be a lot lower. I mean, we're looking at 7, 8, 9 range bars. It's just tight. I mean, even the 5-minute is tight. This 5-minute ATR about 22, 23. That's pretty consistent with what we might see in a normal market on the 2-minute. So it's low. Patel says, Nico, did you take other trades after Friday's stream? Yeah, that's what I mean. I've been, you know, the trend lately seems to be, we talked about this at the beginning of the stream. Last week, I was trading like okay in the morning and I was trading pretty damn well in the afternoon. So Friday, let me see if I remember. I think I took 1 trade on stream. I think 1. And I think it was a loser on stream. So I was down, I think, I don't remember exactly. I think I was down like $2,600 or something at the end of the stream. And I finished the day, it was break even. I was up like 200 bucks, break even. So I was like, you know what, whatever. Ran out of time left. Yeah, Gaines, that was last week, right? Yeah, I think that was mid last week. Yeah, that was an interesting day. The afternoon on that day was just like a scalp in paradise. And you know, this is gonna happen. You're gonna have periods where you're trading really well the whole day. You're gonna have periods where you're not trading so well the whole day. And then you'll have periods that you trade okay in the mornings, really well in the afternoon. Or you trade really well in the mornings and awful in the afternoon. I think the key here is to pick up on these things and try to understand why and make little adjustments if you need to. But don't be quick on that adjustment trigger. Most of the time, the answer is to just keep trading. If you base an adjustment off of 2 trading days, it's probably a mistake. You don't have a big enough sample size to actually make the adjustment yet. All right, come on, Bulls. Step in, give us a nice little second leg. If we could just crack this little high, then the next area to look at, I mean, arguably would be like this little ascending level, and I think that would give us a decent room to push, at least to target. But this little high here, a break there, should put us into the 21.9s, just based on stop losses. And then from there, it's kind of up in the air. Nico, what if trade doesn't hit either stop loss or take profit? If that doesn't happen, which sometimes does happen, I got to do my best to manage it before the market closes. But ideally, that won't happen. Ideally, it'll hit one side or the other before that occurs. I prefer to see the idea play out rather than having to do something kind of arbitrary like that. Caden says, Nico, would you consider taking this trade off if it makes a third lower high, making a descending channel? Yeah, I would consider it. It would depend on how it looks. I'm just bar by bar. But most people, when they try to manage a swing like this, they overmanage and it hurts them. There's a time and place to manage early. That makes sense. Most people overdo it. Very fine line between managing appropriately, which for a swing is usually set it and let it work until something is really obvious. But there's a fine line between managing appropriately and letting the emotion tell you to do something and then giving in. And if you talk to most traders who try to swing, usually if they have a good finger on the pulse of their data, they'll tell you, yeah, you know, I'd probably just be better off for swings, not scalps, but for swings, I'd be better off if I just put it on and managed my bracket and then let it go. That's hard to do. I get it. It's not easy to just sit and watch when you're like, wait, there's a descending channel. Oh, wait, volume weighted average price is right there. Oh, the 27 EMA is right there. It's like, just, you had a thesis. Is it completely broken in a really, really clear way? No? Let it work. But it has to be really, really clear. It can't be like, yeah, maybe I would get short there. No, it's got to be like, if I was flat right now, I would get short. If that's the case, then it makes sense to manage early if you still have a reasonable distance to your stop. For me, I try to just leave it alone. You know, also, there's something to be said about this. When you catch a good swing, it can pay for a lot of losers. It can pay for a lot of little, maybe scalps you took that in hindsight you're like, that might have been a mistake. And if you start managing things early, consistently, what are you doing? You're building habits. Okay, now, if you're managing like a trade like this early all the time, What happens when a trade goes 30 points in the money? Are you telling me you're gonna let it go to your 100-point target or 70-point target? You're probably gonna find a reason to manage it because that's what you do, right? That's what you've been doing. And now you're not getting those points. Right now you could say, well, okay, but what if it reverses and it turns out that I managed it well? Sure, but again, going back to the original point, most people who manage swing trades, like really often, they really look for any reason to manage it. It's not really a swing trade. The point of a swing trade is to put a trade on. It's low effort. It doesn't take a lot of mental capital. You can walk away, go to the store. And again, if you have an edge, it's an quote unquote easier way to pick up a lot of points. And yeah, you got to put on some risk on swing trades. And when you lose a decent chunk. And that's part of the game. But you should never be risking so much that, you know, it actually affects your ability to continue trading at the same size. Again, another reason if you're trading prop to scale horizontally. Trade small per account and just trade a lot of accounts. Because then when you take a swing like this where the risk is $7,300, if it stops me out, that's a relatively small amount per account, right? Bar by bar, purely bar by bar, Joe. I put the brackets out, I watch bar by bar, and unless something smacks me in the face where it's like I have to manage this right now, I let it go. That's another trap, by the way, that a lot of people fall into is if you're trading on the 5 minute, don't start looking for reasons to exit on the 1 minute. Don't do that. Big mistake. If you took the trade on the 5, just watch the 5. You can always find something. Again, the market's going to be 40-60, like all the time. Somewhere between 50-50 and 40-60 or 60-40. 80 to 90% of the time. Sometimes it'll push out to 70-30, probability-wise, of going one way before it goes the other. So you're always going to be able to find something that supports your thesis or goes against it. So you might have a 60% probability of your target getting hit. But if you start looking, you're looking at the 2 minute, you're like, okay, that looks good. The 15 minute, all right, that looks good. Oh, wait, the 1 minute. I got to manage this thing. Less is more on swings, man. Just let it go. Unless something smacks you in the face on the time frame you're looking at, let the swing swing. Let it do its thing. And if it stops you out, my stop is where it is for a very good reason. That right there is where my idea kind of goes out the window, at least for me. That's fine. Derek, size of the average loser or something that goes almost to your target, turns around, stops you out compared to the drawdown you're running. The way that I trade and the way that I've run the math, to me, I cannot justify trading the minis on basically any account except the 300K. And even on the 300Ks, it's like I'm already trading the micros, so I just trade a number of micros on the 300Ks. All right, well, I'll tell you what, I'll be back in 2 minutes. You guys watch this for me. If something happens, I'll have my eye on the chat. Yell and scream and shout in case something happens. All right, back in 2. All right, baby, we are back. And we're now kind of forming a little flat here. So that's where we sit. You know, I'll always say if you're in a trade and you're all worked up about it, you're trading too big. The secret, quote unquote, here is to trade small enough that you do not care. So, still a few points in the red here. See if the bulls can push this higher through its intraday high thus far. Take us up toward target here. All right, John, we'll see you, brother. Yeah, I mean, I do hope we don't go sideways for the next 2 hours. It's been pretty common as of late. I mean, volatility's so low. Goodness, look at this ATR. ATR is now 20 on the 5-minute chart. It's pretty damn low. When it starts dipping below 25 on the 2-minute chart is when I start maybe making some adjustments if we're trading the 2-minute, but below 20 on the 5-minute is definitely slow. That's all right. Let it do what it does. So total range on the day here so far, on the day, is about 140 points. A little bit more, 142 points. Which, you know, I gotta say, it's not awful, but it's definitely not large. But volatility will increase later on in the week here, because we got some news. Again, CPI Wednesday, PPI on Thursday, and then the Michigan prelim number on Friday here. Who's glued to this 5-minute 20, huh? All right, guys. Well, listen, hey, hopefully, I'm hoping to see volatility pick up. I'm going to leave this on. If something slaps me in the face and it's like I have to manage this early, of course, I'm not against doing so. But until that happens, or until we hit one or the other, stop or take profit, I'm just going to let this thing work until one of those three, I guess, four scenarios. The fourth scenario being if it just goes sideways all day, which I definitely hope does not happen. But I'll manage as is. Again, unless something slaps me in the face. This is the look right now. And again, by the way, the target way up there. My minimum here on this trade is like 70 points. So 920 plus is kind of the minimum. Once we get there, I manage bar by bar. See if we can squeeze anything out. Or if the price action is dying, then I'm cool to pull it at that point. All right, but man, volatility is going to pick up later this week. Again, CPI Wednesday, PPI and U.S. initial jobless Thursday, University of Michigan prelim number Friday. So no worries, but today and tomorrow, maybe we'll have to suffer through some continued lower volatility that we saw last week. All right, guys, hey, this started today, by the way. Apex is 80% off single day pass, which means you can pass in one day. You don't have to, but you can if you use code BIG. And of course, Take Profit Trader, daily payouts, huge benefit with them. 30% off, no activation fee, same code BIG, B-I-G. All right, guys, I will see you tomorrow morning, just before market open. Hope you have a good rest of the day. Be smart, let it come to you. Don't overmanage. If you're in a swing trade, only manage if you absolutely need to, but usually overmanagement can kill you. All right, guys, I'll see you tomorrow.